CNBC-TV18.
Nifty down just about 45 odd points, sensex down 160 points.
There is a dip, but it doesn't usually last. So far, it's there, right there, 18,571.
Currently, it's closing in on that 18,500 mark.
Market is seeing deep red today, 140 points lower, pretty much there, 18,394. Similar kind of picture on the Nifty Bank as well.
It was a down day of trade today. We saw a near 250-point cut on the index. The Nifty at one point even breached the 18,400 mark. We saw a decline across the board. All major sectoral indices saw a deep gash of red, and some which were doing well also saw some profit taking. This is Markets Today. You're watching us here on CNBC-TV18. This is a show where we track 6 hours of trade in 5 headlines. Let's talk about those 5 headlines then. Global markets miss a stride as the US Federal Reserve hikes rates to a 15-year high and signals more rates on the annual. Higher for longer is what Jay Powell said. Sensex loses nearly 900 points. The Nifty barely clings on to 18,400. All sectoral indices end with losses. Oil markets remain volatile as crude prices snap a 3-day gaining streak. Another federal rate hike and a rise in crude oil inventory in the US softened prices. However, China's relaxation of COVID-related restrictions and the closure of Keystone pipeline support oil prices. Poonawalla Fincorp will sell its housing finance arm to TPG for 3,900 crore rupees. Meanwhile, JB Chemicals and Pharma says that they will buy the rights to Glenmark's cardio drug Razel in India and Nepal for 314 crore rupees. The stock gains about 2% on the news. Lee Street sees a slew of share sales after VRL Logistics promoters sell a slice to a clutch of foreign investors. In fact, foreign investors offload shares in Sapphire Foods as well. The government issues a notice for sale of up to 5% stake in IRCTC. A likely buyback lifts Hinduja Global Solutions, while Thermax perks up after it's allowed an appeal against a hefty tax demand. Meanwhile, SBI Life also gains in trade after bullish analyst commentary comes in, but it closes flat. Let's tell you what we have in store for you. It's Neelkant Mishra who joins in for the market opinion from Credit Suisse, a rare and an important big voice. Vineet Sambre, the head of equities at DSP Investment Managers, comes in as well, lending his views to the broader markets and big corporate voices. We have Adar Poonawalla, who's chairman of the Poonawalla Group of Poonawalla Fincorp in particular today, joins in on the deal that took place with regards to their housing finance business. Let's talk about markets then. The rate hike and commentary from the US Fed rattled markets across the world, and India was no exception. In fact, it was a downgrade right from the word go. At any given point in time, one shorted, one would have ended in the money. The Lal Street marked its biggest single-day fall in 2 months. Sensex lost almost 900 points. The Nifty lost about 250-odd points. All sectoral indices ending in the red as well. Prashad Nair joins in with a wrap.
Pronounced selling pressure today, and the market ending at the low point on the Nifty and the Bank Nifty. Generally, the impulse for the last so many weeks has been the dip gets bought sooner rather than later in the first couple hours of trade. But today, through the course of the day, the market kept going lower. Banks saw the similar kind of structure. Banks, by the way, have been the stronger part of the market. No such luck today. PSU banks, 10 days in a row, they've gone up, but today they saw losses. Other large sectors, IT, metals and real estate were some of the others. On the large cap, you had cuts coming through in tech names like Tech Mahindra and Infosys. Bank names, the HDFC twins. Titan was down. Aisha was one of the top losers as well. Broader markets, the advance decline, which was in favor of advances initially, flipped completely 2:1 in favor of declines by close. IRCTC, the PSU names were down. Bank of Baroda, Bank of India. Ambuja Cements lost quite a bit. Poonawalla Fincorp, there's a deal there. We spoke with the management. It pulled back. J&K Bank, Campus, G-Shipping. G-Shipping has been a huge outperformer and it sort of gave up some of those gains. There were gainers in the PSU bank space as well, but at the bottom rung of the PSU bank ladder, UCO Bank, Indian Overseas Bank were strongly up. Piramal Enterprises was up. That's been an underperformer. Fact, we had the management with us earlier today. GIC RE, huge underperformer since listing. That was up. GSFC and a bunch of others as well. As I said, the markets have ended at the low point of the day, both the Nifty and the Bank Nifty. And I think everyone will look to the US session because last night's session in equities and yields on the dollar did not reflect how hawkish the Fed was. Will we see a more pronounced reaction out of the US today? Or, as we have seen, these moves don't last. I think that will set the course for us near term when we return.
All right, Prashant, thanks a lot for that. Commenting on the Federal Reserve raising its benchmark interest rates by 50 basis points, the highest level that we've seen in the last 15 years, Jerome Powell said that the hike in rates are restrictive territory and that not substantially restrictive yet, and the Fed will continue raising rates until it achieves its inflation targets. Higher for longer was the word that came in.
As we've gone through the course of this year, as we lifted off and got into the course of the year and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy. There's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time. Our focus right now is really on moving our policy stance to one that is restrictive enough to assure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way.
Meanwhile, former Federal Reserve Board Governor Frederick Mishkin says that the Fed is actually ahead of the curve and has no plans to pivot. Listen in.
An issue I think that's very important is that they've slowed down the speed of raising rates. I'm not sure how critical that is in one sense, but it's important in another, in that, as Jay Powell has emphasized, the real issue is how high they have to go. I actually would have preferred to actually keep on the 75 basis point cycle for one more time, because I think that actually that they have to go to higher rates than the market's anticipating, and also that the dot plots are indicating as well. So I actually also like to be more preemptive. Again, this has to do with the fact that they dropped preemption, which is a huge mistake. So I think that they have to get back to indicate they really are going to be ahead of the curve, and they're going to be serious about not pivoting.
Let's talk about the second headline now. Oil markets remained volatile as crude prices snapped a 3-day gaining streak. However, another federal rate hike and a rise in crude oil inventory in the U.S. helped soften prices. But on the other hand, we had China's relaxation of COVID-related restrictions and the closure of Keystone pipeline supporting the oil prices as well. So it was a tug of war really between demand and supply that kept the prices volatile. Manisha Gupta is here with more.
Well, yes, the crude oil prices have snapped 3 days of gains, but it continues to be very volatile, especially with major events done now and the markets headed towards holidays. So the prices are up by 6.5% in this week after declining 10% in the previous week there. So the only thing that is putting a cap or pulling the prices down is the U.S. inventory data, which has seen the biggest build-up in last 5 or 6 months there. But apart from that, there are supply disruptions that have continued, especially because of the Keystone pipeline that takes crude to the U.S. refineries. Well, that continues to be shut. And second is the OPEC and the IEA statements, which are expecting the demand to improve in 2023 going forward, is also supportive. The third thing is that there are buyers, as the CFTC data shows, at the lower levels, is the reason we are still holding above $80 per barrel there. And then there are forecasts of cold freeze going forward in US and Canada. That would mean that you will need more of gas usages coming in. Until the time you have the winter season going on, it usually is the time that you see supports continuing in heating oil, natural gas and crude prices as well.
All right, and we also had M.K. Surana, the former CMD of HPCL, believing that the worst for crude oil prices are actually behind us, and it's time that OMCs or oil marketing companies actually revise fuel prices. Meanwhile, Harshvardhan Dole, who's an analyst at IIFL, an expert on the oil space, is overweight on oil marketing companies, but does advise some caution on upstream companies. So this basically means that the worst of crude prices are perhaps behind and we will see some decline.
think in the last 6 months, we already seen the high crude prices of going above $120 or so. And now it has come to around 80. Last week, it has come down to 75 also. Again, there is some spike. So I would assume that the worst for the oil prices or the crude prices is behind. And oil marketing companies have tackled it in the last 6 months. So they should be in a better position to tackle it now. But at the same time, the prices have not been changed in the last 6 months, maybe because the government wanted to control the volatility and insulate the consumers against the high volatile prices. But I think now there will be more reason as the prices become benign to make it market driven, and then it may be better for the OMCs, because otherwise it will hurt their balance sheets.
If you were to look at the OMC pack, on an aggregate basis for the first half, they've reported loss of around 18,000 crores. For the second half, the oil marketing companies collectively will register almost 40,000 crores of profit pool. And if you were to believe that to pan out, then I think OMCs are still trading at 3 to 4 times earnings. So our recommendation is basically, be overweight on, oil marketing companies. We like all the three, not that, we like one over the other. We like them as a pack. We are slightly cautious on the upstream, also given the fact that while these companies trade cheap, there is no great volume growth. And relative to the downstream, we tend to be underweight.
All right, let's move on to the third big headline of the day. Poonawalla Fin will sell its housing finance subsidiary to TPG for about 3,900 crore rupees. The stock lost 4% in trade today. However, Abhishek Kothari joins in with a complete peer comparison post this deal. Abhishek.
The multiple that Poonawalla Housing Finance has taken is almost near to where the others are trading, except for Aavas Finance or Aptus, because they are strong in terms of their return ratios. To begin with, the ROA profile that Mr. Poonawalla spoke about for Poonawalla Housing Finance Company, that's on the lower side when you compare to peers. So the peers like Home First Finance has a 3.8% ROA, Aavas Finance has 3.4%, Aptus Value has about 8.7%, while Poonawalla Housing Finance has an ROA profile of just 2.4%, which is in line with Repco Home Finance. So the spread or net interest margin profile of the HFC is also the weakest amongst peers. I just calculated a back on the envelope calculation for reference. It is at about 7.8% in terms of the spreads, while you are seeing spread of Aavas Finance being at 8.2%, and for Aptus it is more than 9%. So the spread is also on the lower side when compared to peers. The book has not been seasoned because you are seeing the growth coming in only last few quarters, let's say 4 to 5 quarters, which is why the operating efficiency is on the lower side. So by that I mean the cost to income ratio when you compare to peers is on the higher side. For Poonawalla Finance it's north of 54%, while for the rest of the field it's anywhere between 20% to 45% in terms of cost to income ratio. So valuation, the price to book value multiple shows that it's not too far away from the listed peers. However, despite the book not being seasoned and it's not seeing a complete business cycle of about 3 to 4 years that an HFC sees, despite that the valuation are slightly on the higher side. Back to you.
Take that point. In fact, in a conversation with CNBC-TV18, Adar Poonawalla, who's the chairman of the Poonawalla Fincorp, said that they may use the cash to actually go ahead and buy a fintech, or could also consider a share buyback.
We're targeting annualized, growing at between 30 to 40%, because we don't want to grow any faster than that in Fincorp, because, then you're not really taking care of all the things that you need to vet, the loans and the kind of assets that you're building. Look, there was no rush really to sell it. In fact, we weren't putting Poonawalla Housing on the market. It was just that this offer came about, and we thought that, look, this is a great way to encash and bring in some more cash at the Fincorp level, which enhances the net worth, and we'll see what to do with that cash. It could be used, for making some small fintech acquisitions. It could be used to returning, some money to the shareholders with the company buyback.
All right. They have a multitude of options with what they could do with the money that they've just raised. But talking about deals itself, The other deal that took place on D Street today, JB Chemicals and Pharma has acquired the rights to Glenmark's cardio drug Rezel in India and Nepal for about 314 crore rupees. The stock gained about 2% on this news. To give us more analysis on this, Sonal Bhutra joins in.
Thanks a lot for that. Well, yes, Glenmark Pharma has decided to divest its cardiac brand, which is Rezel in India and Nepal, and it will be sold to JB Chemicals for a consideration of 314 crore rupees. Now, Rezel franchisee sales for the first half of FY23 was around 29 crore rupees, so the annual run rate so far has been to the tune of 60 crore rupees. We spoke to JB Chemicals. They did tell us that acquisition will be funded 80% via long-term debt and the rest from internal accruals and the cash generation as well. JB Chemicals, remember, has a net debt of 150 crore rupees in its books, and total market size of this new portfolio is 2,440 crore rupees. Credit Suisse has written on JB Chemicals where they say portfolio would have 60% EBITDA margins, which was confirmed by the company. They said margins are between 55 to 60% on this new portfolio acquisition, and this acquisition is valued at 9 times FY24 EBITDA of Rezel portfolio. That's the specific acquisition amount. Acquisition is EPS neutral or marginally EPS accretive for JB Chemicals. And now, after this acquisition, India constitutes 2/3 of JB Chemicals' portfolio. So that's the update coming in as far as JB Chemicals and Glenmark Pharma is concerned.
All right, and that's not all. In fact, earlier today we spoke with Nikhil Chopra of JB Chemicals as well, and he said that the company does aim to double its revenue in the cardiac market. Let's hear him out.
This market is growing at low single digit, rosuvastatin and combinations. And for us, with 2.5 to 3% market share in 2,500 crore market, we are looking at in next 3 to 4 years, why don't we double our revenue? That is what is the opportunity for us. So we have taken long-term debt. I think 70-80% is being funded with the help of debt, and the rest will be the cash debt will be generating will help us in terms of how we can fund this.
All right, let's take a short break. Before we go, here are some snippets of the expert opinion that we've got through the day.
We may have some bit of worries around the current demand environment, which is sort of showing some kind of sluggishness as far as the bottom of the pyramid is concerned, or the rural side is concerned. But I think despite that, we have seen decent growth coming back. And once we have the other part of the economy, which is the rural side of the economy or the bottom end of the pyramid, which also starts adding up in terms of the growth prospects, I think that should keep the markets overall tone positive.
I think that the economy currently is doing far better than what official data reports. I think the investors, or I would say even forecasters, are struggling with what tends to happen when you see a big break in trend. We think that the economy is a lot closer to the pre-pandemic path than what even official data is suggesting. And the slope of the curve, which is the growth that occurs going forward, is also going to be better than what consensus is at. So we are going to slow from here. We are slowing down. We think we are slowing from, say, 9.5% to more like 7%.
Welcome back. You're watching us here on Markets Today, and let's talk about the rest of the headlines that we're tracking for you today. We've spoken about the big deals that took place on the street today. We spoke about oil prices and the market itself, which saw a bit of a trudging after some days of gaining. IRCTC plummeted 6% after the government announced that it will sell 5% stake in the company, the floor price of which has been fixed at 680 rupees a share, which is over 7% discount to yesterday's closing price. And that's exactly what caused the decline in the share prices, apart from the fact that there would be supply coming in on that counter as well. 2.5% stake is what the government has offered as the base volume in terms of giving it to shareholders, and were this to be oversubscribed, they have another 2.5% to give as well. So overall, a total of 5% stake will be offered by the government. 2.5% is the base, and another 2.5% in event of oversubscription. What the street took note of was a big discount that the government was offering this stake at 7.5% as compared to yesterday's close price. The government's stake in the company is at 67.4%. So if the offer goes through entirely, including the additional option, the stake will fall to around 62.5%. So oversupply and higher discount, leading that stock price lower by 6%. But another stock that was in focus and gained in today's trading session instead was Sapphire Foods, 68.2 lakh shares of KFC and Pizza Hut operator Sapphire Foods, tantamounting to close to around 10.7% equity changed hands via a block deal. Promoter groups and a private equity fund have offloaded some of their stake. The stock jumped as the belief is that there were strong buyers on the other side. Nimesh Shah joins in with more. Nimesh.
As expected, a large block, nearly 11% equity did change hands. The block happened in the block window, which suggests that it was well bid. We know the sellers since last evening that, Sapphire Mauritius sold, Goldman Sachs AMC sold a large chunk, and QSR, which is Samara Capital, they sold a small chunk. So the three large investors sold out nearly 11%. In terms of buyers, I understand it was well bid and from both FIs and DIs. So a couple of large FIs have bought into this block deal, and some domestic funds have also participated. So the disclosures will be important towards the end or maybe post markets today. A large part of the supply is out of the way now, but still Samara Capital holds a large chunk. So there is a 90-day lockup for all the other investors except for QSR, and they can sell further. But for now, large part of the supply is over, and the fact that some big funds have bought into, there is a bit of support to the stock as well. And as I said, the block happened in the block window, so there was strong demand from global investors.
Take that point. With that, we talk about the fifth headline for the day. SBI Life closed flat after gaining in trade today on the back of a bullish analyst commentary coming in. Surabhi Sutaria joins in with the details of that analyst note.
Thanks for that. So SBI Life is gaining traction in today's trading session. CLSA in its recent report has said that they're bullish on the life insurance space. They've also said that the risk reward is getting favorable owing to the fundamentals turning, and they expect the sector to outperform in the calendar year 2023. They say that the valuations are quite undemanding, and amongst the sector, SBI Life is their preferred pick with a target price of 1650, which they have raised from their earlier target of 1600. Additionally, Motilal Oswal has also a buy rating on SBI Life with a target price of 1600. According to them, the new business premium has seen a strong growth of 26% this financial year itself. Their premium mix has also been improving, where the share of protection and annuity has been increasing. They estimate the value of new business, that is the VNB, will grow at a 38% CAGR in the next 2 years, and expect VNB contribution to operating return on embedded value to improve to 15% in FY24 from 9% in FY20. SBI Life remains the top pick in the insurance sector.
All right, let's talk about some other stocks in news as well. Thermax, Hinduja Global, both of them in focus. Why? Vahishta joins in to tell us more.
Well, Thermax had received demand notices from the Excise Department during the earlier years for approximately 1,380 crores, for which Thermax had filed an appeal against the same before the Customs, Excise and Service Tax Appellate Tribunal in Mumbai. And the tribunal has now allowed the appeal and passed an order in favor of Thermax on the 13th of December. So some positive news here, though there is no financial impact on the company due to the said order. And for Hinduja Global Solutions, there is going to be a board meeting on the 19th of December to consider a proposal for buyback of shares. The current cash and bank balance, including investments on the books of the company, is at 2,300 crores.
All right, and Infosys co-founders gathered to mark 40 years of the inception of the company. It's all about the milestones. Nandan Nilekani, who's currently the non-executive chairman of Infosys, says that he will pass the baton to someone who is not among the co-founders of the company. In fact, wants Infosys to be a no-drama, high-relevance company without bureaucratic cholesterol. Meanwhile, N.R. Narayan Murthy says he was completely wrong to keep the family of Infosys founders out of the company.
Handing over to a chairman at whatever point that I exit from the scene, who will be the first, not the first, but a non-founder. And now there's no plan B now. I mean, if I hand over to somebody and it doesn't work out, there's no plan B. I can't come back at some 75 or something.
I was completely wrong in that. I think I was depriving this organization of legitimate talent. So I take back that whatever I said. I think that every individual must have the same opportunity as every other individual if he or she is considered the best person for that job.
All right, then with that, it's a wrap on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC-TV18. Have a good night.